Well, back home on Dalal Street, markets ended Friday's session lower. Nifty gave up the 10,800 mark and ended below the 200-day moving average, while Sensex managed to hold on to the 36,000 mark. Banks and mid-caps, they fell in line with benchmarks. Both indices shed around 1/5%. And Nigel will tell us what are the market cues that we need to watch out for today.
Well, overnight, Sonal, we had more or less flattish cues, so that's not such a bad thing, actually. But as you said, in Friday's trading session, the Nifty ended with a bit of a cut. The Nifty Bank as well was down close to around 0.3%. And a couple of earnings reactions really haven't been great. TCS came out with its set of numbers that didn't look very, very great. When you're trading at a premium valuation to the sector, and when you come out with those set of numbers, that's why the stock was down close to around 2.5%. IndusInd Bank, the post-mortem didn't look very, very good. So first glance, the numbers look good. The street would have liked them to, provide entirely for that Island FS, exposure in the slippages, and then maybe in fact it could have moved on from there. But the stock has corrected nearly around 100 rupees from the high that it made post the number. So that was quite disappointing. But otherwise, there were losers. Tata Motors, Yes Bank, both of them were losing in Friday's trading session. Getting to the flows though, the FIs, they used the opportunity to sell. Sold close to around 700 crores odd. The DIIs, well, they pumped in a poultry 120 crores odd. Remember, institutions were net sellers, but if I'm looking at the gross numbers, then the FI participation was lower than the DII participation in the cash market. In the derivatives market, though, the FIs, they added some shorts. They're mildly net short on the index. They're buying protection in case things go wrong. So they're buying puts, which is not such a bad thing. But they're writing puts as well as calls, telling you they don't expect a big downside inside. At least that's what the data looks like. In terms of economic data, well, the IIP data didn't look very, very good. It came in at around 0.5%. It came in on a higher base, though. Broad-based deceleration is what we saw in industrial activity. So that economic data didn't look very, very good. But all eyes on inflation data. That'll be out later today. We've got actually quite a heavy week in terms of economic data. The Chinese trade data will be out, so we'll keep an eye out on that front. And the US Fed Reserve's Beige Book, that'll be coming out as well. That'll give us a sense, in terms of how the US economy is really shaping up. So that's going to be important. But I think tomorrow is going to be very, very important because the British lawmakers, they are set to vote on a British, Prime Minister Theresa May's Brexit deal. So tomorrow is going to be a very, very important day in terms of the global context. The key levels up for you on the screen. The current level, we ended mildly below the 200 DMA. So we'll keep an eye out on that front. For starters, the SGX Nifty is saying we'll take it off to kickstart trade. Can we hold over those levels? And that's going to be quite important. Broad range, 50 DMA on the downside. On the upside, we have seen numerous times when you go to around 10,860 to around 10,900, we have seen selling from there. So we'll keep an eye out on around that 200-point range.
Absolutely, Nigel. Thanks a lot for that. But also tell us what are the stocks that we are watching out for in today's trade? Well,
tech stocks will continue to be in focus. TCS was in focus in Friday's trading session. Today, Infosys is going to be very, very important. Stellar revenue growth out there on a constant currency basis, on a year-on-year basis, it's nearly around 10%. I remember maybe 5 or 6 quarters ago, the constant currency growth on a year-on-year basis was only around 5%. So the top line looked good, but the margins were a bit of a mess. And over the last few quarters as well, there has been some margin compression. In fact, the margins were the lowest in the recent past. But the big kicker is that they've raised the FY19 guidance and higher than what the street was working with as well. So Infosys could bat for the bulls. But in terms of margin compression, I'm wondering whether the street is going to get a little cautious in terms of IT stocks on the whole. Because revenue growth is going to come about, but margins not looking very good. So that's about Infosys. Moving to numbers today, ICICI Securities and Tata Metallics, both of them come out with a set of numbers. We'll keep an eye out on those stocks. From the auto ancillary stocks, they are expected to be in a bit of a tizzy, but for the time being at least, JNA Axles, the numbers look quite good. Good growth on the top line, good growth in terms of profitability. So thumbs up out there. But Avenue Supermarts, that stock had a runaway rally, but the numbers really, they're throwing up a few challenges now because the growth has slowed down, even profitability has come down, and there was some margin compression as well. When you trade at 75, 80 times your forward earnings, then you have to really perform great. But the liquidity in the stock is very low. So I don't know whether or not it will fall that much, but we'll have to keep an eye out. And if it falls so much, will there be some buying? We'll keep an eye out on that stock. Tata Sponge, the numbers look quite disappointing, so keep an eye out on that stock as well. And in terms of, changes in terms of the composition of boards, Yes Bank as well as Federal Bank, we'll keep an eye out on both those two stocks as well.
Absolutely, Nigel. We'll keep an eye out on all those stocks. But right now, it's time for a break. On the other side, Rahul Gandhi criticizes Modi government on various issues. That mega News 18 exclusive when we return.